every day, but especially from the experience of others, is just cheaper. With that as a theme, welcome to our Zoom web series hosted by One Tree Hill and PMS Card on the Juggernauts, conversations with curious and uncommon fund managers. We have with us today Samir Narayan, who's a fund manager at Invesco PMS, managing Rise and Dawn. Welcome, Samir, to the Juggernauts.
Thank you, Jay. Thank you for having me here. It's a pleasure.
Excellent. Samir, what we like to get started with is what we call our Machine Gun 15. A quick fire round of questions for you that will probably make you think more than we are hoping at least 2-3 more seconds than you usually do.
Okay.
So if you are ready, I'm happy to jump into it.
Please shoot.
Okay, come on. Uh, are we going to see a rush of banking licenses with a change in regulations?
I don't think so.
Okay. When do you think we'll see a change with a rush for banking licenses?
Well, Jay, I think right now already licenses are available. So if you see in the last half a decade, we've had a lot of small finance banks, etc., being given out licenses. So technically, I don't think there's a limitation as such, which used to be some time back. So I think there today regulations are by and large far more liberal than what they used to be. So in case somebody backs himself and he's willing to build a liability franchise, because see, owning a banking license is a matter of both prestige as well as it's a very good sort of brag value. But I
Sure.
think the idea is that banking franchises are not so much in terms of what is asset or market cap. It is basically about your liability franchise, and those don't get built over time. So for that, your brand needs to be credible. That's when people will come and make deposits with you. Then you need to be having good underwriting practices, so that you can be probably generating a reasonable yield on whatever you try and lend out, and you try and do all that. So I think that is basically the heavy lifting and the hard work. So
Okay.
I think even though licenses from a regulatory standpoint, I don't think there has been any bar as such. And
Sure.
I think what the recommendations that we've seen last weekend, I think those will only try and sort of give more confidence that the regulator is not trying to say that I will not give out, or the license per se has value. I think today that's not we've probably gone ahead in that journey over the last half a decade. And
Okay.
today I think very clearly, in fact, there was also in between a school of thought which said that maybe India doesn't need so many banks.
Oh, okay. Sure.
So
No, fair enough. So I think from your standpoint, they'll continue to be very conservative while saying that, look, we are open, but we'll still choose and decide who to give a license to.
yeah, because see, first is you have to there's a process, there is a checklist, there are regulatory norms that have to be complied with, and at the same time, whoever is backing, because this is clearly a long term play. I mean,
Of course.
in India you've not seen any bank either fold up or go in liquidation or whatever. So it's like a business that today if you run, it'll technically keep running, ceteris paribus.
Sure.
So a sponsor has to have that kind of a long term commitment in place, and only then can you build the right practices, etc., to create that liability franchise, which is actually the core of any banking business.
Understood. No, fair. Completely makes sense. And sort of, now moving on from the RBI to the government, 6 months back, there was a lot of stimulus, or what seemed to be a lot of stimulus specifically to our economy. Are there still silver bullets remaining with the government to do more?
Well, Jay, I think what India experiment has been that we are definitely not in the so-called lucky countries like the US or Japan who can probably print trillions of dollars of stimulus,
Sure.
because thankfully we don't, or rather unfortunately we don't have that luxury. The idea is that what government has done is they have tried to be prudent as to give support where it is needed at that time. So therefore, first, if you saw after the first wave, the human element of the tragedy had to be sort of addressed first. So therefore, if you
Sure.
see, contrary to popular perception, I think the rural and the so-called hinterland facing allocations, they have actually risen over the last year in terms of budgetary support. So therefore, government is clearly spending money where it needs to be given more, and hopefully it will get better bang for buck. So I think that very clearly is happening. In terms of stimulus, yes, I would say that they have done their best so as to enable and facilitate demand revival. But at the end of the day, see, we Indians are all savers mindset. So whenever you see uncertainty, I think all of us cut down on our consumption, and
Got
that
it.
is an Indian trait. I think that has unfortunately not got anything to do with the government or their practices. It is basically us Indians that whenever we see that the windscreen looks slightly hazy or smoky, we typically try and sort of rein our consumption fervors in, and I think that's pretty much what has happened.
Assuming Biden has won, is that a good thing, bad thing, neutral for India, according to you?
Jay, I think y- I don't think it'll at the margin do anything negative. But what it will definitely do is that perhaps US may tend to be coming back into sort of a conciliatory approach with China, which is amongst the largest trading partners in the world.
Sure.
And I think that augurs well both for world economy as well as India by and large, because
Right.
I think the earlier administration, or rather the current administration, had taken a very sort of headstrong approach and a very in the face kind of a confrontationist stand, which I think I don't know whether how much it has really affected the terms of trade. But I think it's somehow the other, at least the narrative has got that there are it's a very polarizing kind of a stand from where both leading trade partners in the world are talking to each other, which actually is not
Sure.
good news. So I think with Mr. Biden in, you will probably, as he mentioned in his so-called, if I can say, acceptance speeches, that he's talked about now is the time for healing. So now
Sure.
in the US needs to come back into sort of regaining their so-called perception in the global world. So I think all that augurs well, and that has good tidings.
No, fair. I think that's what the belief is that he at least seems to be more calmer and with a very
Balanced.
stable Twitter account more than anything else.
The word is
Uh,
balanced.
the world is balanced, absolutely, absolutely. Post Feb March, now that we've had a lot of time to think about different markets, different sectors. What are the two most important trends that you've seen across this time that have emerged
You're saying over the last 6 months?
over the last 6 months?
Okay. I think the first trend is very clearly that corporate balance sheet, or rather P&Ls, have never been so efficient as they have become in the last 6 months. I think that is clearly across the board.
Very
So
interesting.
everybody in the last 6 months has looked at every single line item of cost and has seen that wherever whatever was unnecessary has been clearly junked, and B, whatever could have been variabilized has clearly been done. So I think today corporate P&Ls are perhaps in their best shape than they have ever been. That is the first trend. Second, I would say, I think this whole work from home and this whole technology shift and adoption on as a user, I think that is here to stay for a long period of time, because
Sure.
A, it is efficient. Today, you and me spend less time commuting, so hence we could have a far more productive day.
Yeah.
So I think that obviously means that we are doing far better with our time than what we used to. So, you know, I'm not saying that work from home will become a continuity for everybody in India, because more than half of India actually works with their hands, so which means they can't work from home. So
Sure.
that is another reality that we need to sort of grapple with. But I think the advent of technology is
Mhm.
perhaps the second trend that I can mention, because I think what this means is that technology is perhaps all pervasive now, and it could have the biggest impact in terms of business outcomes than what it has ever had since Y2K. Because in
Sure.
Y2K is when the Indian tech services actually happened. I think today we are probably back after a 20-year into that same phase, whereby today technology is perhaps the single biggest business outcome generator.
Well, fair. Makes complete sense, I think, Samir. And sort of moving to the public markets now. Uh, everyone is greedy. Everyone wants to make money at the end of the day.
And
So,
quick. The answer
quick,
is they want to make money as of yesterday.
as of yesterday, fair enough. So, what is the what should be the motivation for today's investor? Should it more be related to a balance or capital preservation or capital acceleration?
Well, I think capital acceleration is a very aggressive term, Jay. So, I
You'll
think
be
I
you'll be surprised of the number of people who try and chase that.
see that. So everybody chases a mirage. The point is how many really actually get it. So,
Sure, sure.
so the idea is that what Mr. Buffett has already said that, always remember two golden rules of investing. First is never lose money. Second, never forget rule number one. So I will, take the liberty of probably, reiterating that, because, as we speak at 13,000 Nifty, obviously it makes sense to be allocated or positioned to equity as an asset class. And I say that because today, when you're looking at, AV, it is perhaps the only asset class where over a holding period of 4 or 5 years, you could hope to, make a positive real return. Because
Sure.
I think today, the whole uh, sort of paradigm for an investor is that it's a big yield chase that is going on, and not only
Yeah,
for the retail investor here, but even globally, with whatever 30 odd trillion dollars of bonds being,
zero.
deployed at zero
Yeah,
interest rates, all those numbers. So basically, I think that shows that yield is at a premium, which means that today, as an investor, if I have to look for my financial goals, I need to look at which asset classes are best positioned to give me positive real rate over a holding period of say 4 to 5 years, because anything short is perhaps more by, chance rather than by design.
yeah.
So I think in that perspective, I will say that equity as an asset class couldn't have had a bigger tailwind than it has ever
Very
had
interesting.
earlier.
Very
So, so that makes sense. But the fact is, do I go all in at 13,000? Well, I don't know, because honestly, to borrow a phrase from Hindi, I think in today's, if I look at the prices, there's a lot of josh and probably a little bit of hosh. So,
got
I think I think there that reality would also come and sort of, realign, because
sure.
obviously markets being markets, event happens and then reasons follow. Like
Right.
how we had a correction of 30% in March, and then we realized, oh, COVID has happened. So I think those kind of things, do happen. And markets being markets, they are not as forgiving as one would like them to be. So at 13,000, I think I would say it is, it's equity is indeed the asset class to be in, but one needs to be cautious as to where are you putting money in. For example, if you'll buy any stock today that you will buy more of, even if you get it say 30% cheaper tomorrow, only then you should go ahead and invest.
Got it. Got it. And one of the most seemingly obvious answer to the rally that we've seen in the last 2 3 months or 4 5 months has been liquidity, right? As you mentioned, money chasing some sort of premium and yields rather than the $30 trillion lying at zero yields. Do you think this will continue, or will it be pocketed with volatility?
See, in fact, volatility is now a given. It's only that today, you see, volatility has to be looked in couple of ways. Today, if you look at the pricing of options, they are so cheap. It's a lot of mispricing of options, which means people are playing only one direction of volatility, because you think that that is the only outcome. Now, well, it can turn out to be so, because there is a lot of money sloshing around which needs to be deployed. So therefore, you tend to get asset bubbles, and those asset bubbles are today making correlation amongst asset classes almost equal to one, because everything is going
Right.
up in unison and everything corrects also at the same time. So there is nothing like a counterbalance that is in play today. But I think, it would be difficult, or not of not a likely probable outcome, that
Okay.
today everybody is unanimously bearish the dollar. Now,
Okay.
that to my mind, I think it's slightly. I would not bet my money on that, for the simple reason that today, if 2/3 of the world's reserves and assets are being marked in a particular currency, and
Sure.
everybody is bearish on that currency, so which means what? I mean, how
Yeah.
do you interpret that? So that means, if all things remaining constant, whatever I do today, assuming that the dollar call is right and a dollar is likely to fall, That means today, if my asset price or asset value is 100, tomorrow it should be 98.
Yeah,
So, I mean, how do you reconcile to that? At least I can't.
sure,
So I
sure,
think there is some, dislocation. Now, what could this level of liquidity reverse that, or rather, what could be the trigger for reversing this liquidity? Nobody knows.
of
But
course.
I think just to put in perspective, what we saw in the month of Feb March was basically a roughly a 10-11 billion dollar kind of a FII withdrawal, which is
Sure.
what whacked the market out by almost 30%. Now, so if you look at, I think in the Indian context, a 3.2 trillion dollar market cap is actually being swung at the margin by an incremental flow of hardly 10 billion.
That's true.
That is the statement of fact that all of us should keep in mind.
Sure. No, superb. I think something that's describing what liquidity does and or what it can't do and when it can do it more than anything else. And now moving on to probably a very interesting question. What is it that nobody knows about you, or what is the most interesting aspect about you?
Well, I think uh, what people don't know about me is that, you know, at some point in time, I thought that I had a good chance of being a good singer.
Ah, wow. Okay.
So, and and I think the most interesting part about me is that I'm in a continuous state of evolution.
Okay. Okay. Super. I think that's what you need to be, right? So, which comes to my next question: Are you an optimist, pessimist, or realist?
uh, I am a realist by mind, but an optimist by heart.
Realist by mind, optimist by heart. Very interesting. And what works in the markets?
Well, frankly, that is a question that I don't think anybody is any wiser to answer, even after being in the market for 40, 50 years. So,
Sure. Sure.
every day is a different day, every day is a new day, and every day is a different learning.
Fantastic. Great. So we are at the end of our Machine Gun 15.
Oh,
I'm
wow.
happy to say you've come up with flying colors,
Roger,
and I can see that you're in office and your coffee with Karan Hamper should reach you soon.
thank you.
Uh, I wouldn't get too happy. I just read some news where we might be going into another lockdown, or the decision on that is going to be taken soon. Where do you think we are headed? We are seeing the second wave or third wave in Europe. Obviously, India is testing a lot more. There was Diwali and obviously a couple of other festivals coming. Where do you think we are headed as India
On the COVID scene,
on the COVID?
well, Jay, I think, uh, you know, today the government stance is that, you know, earlier it was important to save lives, but after a 6 months kind of a learning period with the disease, I think today the realization is lives are more important or equally important as livelihood. So now there needs to be a balance, and which is what we are in. But having said that, I think the second wave, as all pandemics which have been chronicled till date have shown, that the second wave typically tends to be far more ferocious and far more lethal, and which is what we are probably seeing unfurl in US and Europe.
Sure.
Even in India, even though relative to our past, our level of testing has gone up, but I think our fatality rate was always under control, so therefore that's not an issue. But I think what one needs to see from here onwards is that unless and until people tend to lower their guards, and and which is quite possible, because after a 6 month kind of a confinement or a
Sure.
restricted living, fatigue gets to everybody. So
Yeah.
everybody reacts very differently. So in case you feel that doesn't matter, I'm good, nothing's going to happen, I think that is perhaps the first signal of danger, because we need to keep our guards up, we need to maintain social distancing, we need to take precautions. And unfortunately or fortunately, the vaccine, at the margin, by the time it reaches us, frankly, we need to take care of ourselves. So
Fair.
that is where we are. And I think even though the word on whether we will have a second lockdown or not is still to be taken by the
Of
our
course.
state administration in the next 10 days, but I would probably believe that whether whatever approach we take, it doesn't mean that if the second lockdown is not implemented, it doesn't mean that it is life is back to normal. So we need to
Okay.
probably, it can't be that we will continue to live the way we used to till Feb 2020. So we need to be
Right.
still watchful. We need to put on our mask. We need to wash our hands. We need to use sanitizers. We need to maintain social distancing. All that needs to be done. But you
Sure.
know if that happens, obviously the level of business activity will be impacted, and there will be a cost attached to it. And hence, the so-called the pent-up demand that we've seen unleash in the September quarter,
Yeah.
where we've seen great earnings delivery for pretty much the entire broad market as such. I think in that we need to then segregate that into sustainable demand and pent up. So if you remove pent up, is sustainable good enough? I think those questions will probably get answered in December and in March quarter. My sense is that hopefully in March quarter we should see signs of sustainable revival, because by December we'll probably see the agri output and the crop hitting the markets. Until that time, we'll see as to how sticky is the food inflation, which is another cause for concern in the Indian environment,
Sure.
because our central bank needs to keep that also in mind. Because in case our core inflation, which is largely led by food
Absolutely.
inflation, if that becomes sticky, I think livelihoods have been affected, wage incomes have been hit. So, and especially for the lower sections of society, so there a food inflation really hits them hard, and it pinches. So
Right.
a government of the land has to be sensitive to that. So I think those are things that we'll probably get answers to as we go along into the next year.
No, fantastic. And now, Samir, you've recently joined Invesco, but you come with a ton of experience in managing sort of, one of India's largest family offices. And I'm pretty sure, there was a lot to do out there. Uh, at Invesco, obviously, we know about Rise and Dawn, which have done quite well in the past. However, what do you think are the core values and the edge that Invesco you and the strategy that brings to an investor stable?
Well, Jay, I think at Invesco, our clear differentiator is our, the way we look at stocks and the way we manage the investment process. For starters, we are pure active managers. So any stock that we own will always be an active bet, which means it will be more than its weight in its benchmark. So, we
Interesting.
are active managers, but and we run a categorization framework here, which is where we have a leader, warrior, you know
That's right.
shotgun, commodities, diamond. We have
Okay.
we have these categorization framework, which is basically dovetailing into a life cycle of a company.
Okay.
And that is what we try and see, whenever we look at companies, whenever we meet them, whenever we track their numbers on a quarterly basis and have our interactions with them, we try and slot where in this journey is the company today, because then that at least gives us a journey, as in a time period, as to what are we expecting in terms of deliverables from the company, and a so-called return objective, that this is a short term thing, this is probably over a period of time we will unlock value. For example, our Rise and Dawn are clear products which are meant for capturing operating leverage and financial leverage. And I
Right.
think today, if you look at the broad market construct, it lends itself well, because in India the last 3 years earnings growth has been virtually stagnant. So I think today the whole Indian market as such is perhaps primed for delivering operating leverage, financial leverage, because most of corporate India has been in a continuous deleveraging mode over the last 5 6 years. And today, if you see, most of the corporate balance sheets are perhaps in their best health than what they have been in the last decade. So I think, and now in post COVID, we've also seen most of the consumers also deleverage. So today,
Sure.
if you see from here onwards, I think whenever the sort of upturn starts and then gathers pace, I think Rise and Dawn are perhaps best positioned to be able to contribute to investors' wealth, because we believe that operating leverage and financial leverage theme is here to stay, because
Okay.
there is life after COVID, and India will prosper, and we will probably have that year of 25% kind of earnings growth, and then hopefully a 15% CAGR over the next 3 years. So I think Rise
Right.
and Dawn, as both the themes, they are right now positioned properly to be able to capture those ideas, and that's what we aim to deliver for investors.
Oh, fantastic. I think that is what, uh, obviously the world is changing fairly quickly, right? Uh, I think you guys are obviously doing something different than on the street, and full credit for that in terms of how you guys are looking at different companies. But let me try and ask you a very specific question, and not necessarily to a specific stock, but what has been your best and worst investment till date? Not necessarily at Invesco, in your experience.
Okay. I think in my investing journey, the best investment has been Aisha Motors. We
Okay.
got the stock really early in the family office that I was managing prior to Invesco. We picked it up around I think levels of 2000, 2500.
Wow. Okay.
We saw the journey all the way till 30, 32,000.
Sure.
So that was perhaps the best return. I mean, i
Okay.
didn't i didn't think that it'll probably go that far, because the only thing that we were thinking of when we bought it was we thought it was a play on all the three axes of India's growth. A, consumption through premiumization, because they were selling a real high end bike, and
Yeah.
the biking culture was just going, starting to get foothold in the economy, uh, in terms of customer preferences. Second was, it was also because they have a CV business, so it was also giving you industrial, or a leg on the industrial play in terms of the freight movement, etc. And third and not the least, it was giving you an aspirational play. I mean, we saw
Yeah.
even ladies bikers club, etc., start, and the company was actually promoting all that very actively in terms
Right.
of making biking a culture, and a sort of habit rather than just a product. So I think all that fitted in well, and probably the stock saw a great journey. And
Okay.
I think the worst investment that perhaps I did was Just Dial. I mean, at that
Sure.
point in time, we thought that when they were talking about their Search Plus, etc., we thought that okay, they seem to have really got the sort of uh, the puzzle right. But somehow or the other, the execution was really sloppy, and then things just didn't fall in place. Even though it was perhaps an internet company which was cash, it was not burning cash, it was cash positive. So
Right.
although it was perhaps it had a lot of promise, but unfortunately it didn't deliver.
Okay. Fair. And sort of, just carrying on with that thread, as a fund manager, what we've seen is there are three sort of spokes which are there. One is the expectation from either the fund or the clients, the reality on the ground, and then the liquidity of the portfolio, right? How do you marry all these three together? What's the challenges there?
Well, Jay, the biggest challenge is a client wants you to be right every day, every month, every quarter, and every year.
Sure.
And that unfortunately never happens. So
Sure.
obviously there are phases, because just like no company is in a perpetual growth mode. Similarly, no portfolio will perform in all sorts of market
Sure.
cycles. So I think that is the first reality, and that you need to accept. One needs to be comfortable with your style. Are you basically a growth investor? Are you a value investor? Are you sort of a momentum investor? So one needs to be comfortable with that. And the strategy, you have to be honest and consistent and dedicated to the strategy. You need to believe in it, that yes, operating leverage, financial leverage will deliver, because right now it's kind of the right time, right place for this kind of a product positioning. And that's where you need to go with it. So even though in the short term, your patience might be tested, but over the long term, your conviction will be rewarded.
Okay, superb. And so then, you've obviously done this over the last 15, 20 years. And what is that one piece of advice that you'd give to a budding fund manager right now?
Okay. I think I'll just tell him that, listen, do what you think is right, but do your homework. Because in the market there are fads, everything seems that, oh, I've missed out, because this FOMO is perhaps the biggest if you can get rid of the FOMO factor, trust me, half of your
Oh.
issues are solved. So don't just believe anything, because somebody had given me this line: follow the crowd if you want to go nowhere. So I'll probably give a budding fund manager the same advice.
Fair enough. And we're almost coming to the end of this, Samir. The second last question, let's call it, would be, if you're not a fund manager investor, you are not a value investor, what is the other asset or style that you'll be putting your money in?
Okay, I think I'll probably be doing special situation or stressed case companies,
Okay.
because I think that is because that's a segment of uh, you know so-called market facing, uh, where I think I can probably get a bit of because of my value leanings, that
Sure.
if there is a sort of a stressed case situation or a special case situation company where the business is really available for a song, and it is available close to liquidation value, I would rather I would probably be putting my money there.
Okay. Is that where startups are right now?
No, startup is all fads. Startup is all
Okay.
FOMOs. So, I mean, I'm saying stress situation, which means there needs to be an asset, there needs to be an event because of which that asset is not getting sweated,
Got it.
and there needs to be probably a path or a journey whereby you can make out that because of ABC factors, things will turn, which is right now not being factored in the valuations.
Got it. Got it. And one of the themes that has been emerging as well is, a lot of people are saying that, look, we need to now make investments outside the geography of India, right? If I could just twist the question around, when does India become a China in terms of scale?
Well, I think, Jay, at least not in our lifetimes.
Not in our lifetime.
At least I don't think so. See, because
Okay.
uh, if you look at the progression of India, we have done a lot of things far better than China. I mean, we all started with a so-called agrarian economy background, but China fitted the manufacturing piece well, whereas India straight away catapulted to the services side. So, and that's a transition you haven't seen many economies of our size do in the world.
Very interesting.
So,
Oh, right.
so I think there, uh, I don't say India and China, or rather, this question of when will India become China. I think that's not the right question. The idea is, when will India realize its true potential? I don't want to become a China. I want to
Sure.
become the best India. I think that is where our bull market or our sort of rightful place under the sun is going to be, because
Okay.
we have a lot of things going for us. I mean, in terms of the demographics, the capability, and basically entrepreneurship. I think today, if you see the startup ecosystem that you talked about, I think these are people who, there are so many budding guys who want to try and solve a big world problem, and they think they've got the right solution. So you know and in disruption, I think that is one leg that one you know I also need to learn as an investor as we go along, that disruption you cannot price in today. It'll
Sure.
not sort of give you cash flows, it'll be probably looking very expensive. But what it is doing is, it is subtly changing the entire consumption habit, the adoption, the aspiration. And
Sure.
after you get it's a winner takes all. So the moment you go across that threshold, after that you can lift pricing, it will still be sticky. So how do I price in that disruption? Now, obviously there have been earlier cases also. You had all sorts of manias, tulip manias, bubbles, etc. But I think today, the way we see and the way the startup ecosystem is evolving in India, I think I'm very happy to see that today we have the right kind of entrepreneurial mindset for young budding guys out of college to be able to try and take a shot at solving the large world problems, and that's good news. So I think this is what make us overtake China. You know,
Okay.
you don't need to follow one model. I mean, just because
Sure.
China has become a size X, that doesn't mean India will also follow the same model. We could probably attain that in a very different fashion, and that's what perhaps we should be hoping that it does.
No, fingers crossed on that, Samin. And on that note, just take a moment to thank you so much for your time. So the
A
fantastic
pleasure, Jay.
conversation, great new ideas out there for people to invest in. Uh, Hope everything's well with you, your family, and all the best for 2021 to Invesco and yourself.
Thank you, Jay, and thank you for having me here. It was a wonderful session with you, and let's hope that God be with all of us, and 2021 gets us far better news, and we put the
Absolutely.
ghost of 2020 behind